Welcome to Own the Chaos. The stock market is crazy and chaotic.
Crash. You son of a... Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby, to the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. There is no Fat Man Zoom, but we're going to help you own the crazy and chaotic world that is the stock market anyway. What's up, guys? Welcome to the channel. If you guys are joining for the first time, hopefully you hit that subscribe button by the end of the show. Fat Man Zoom is gone yet again today, but he is on a plane right now, flying over. He's going to land here in just a few, but it's just me again. So hopefully that's okay. He'll be back tomorrow. But still all kinds of crazy, awesome, fun stuff going on in the market today. And man, it is just, I'm just so pumped. And I'm proud of you guys, especially for those of you in the Chaos crew, for those of you who've been following the channel for some time, at least up until last week. We said last week was a bunch of noise, right? There was lots of opportunities to buy the dip. The stock market's not going anywhere. The Fed, the quad witching, all that BS was just BS. And this week has been absolutely phenomenal. If you guys have been able to take advantage of some of the dips that we saw, especially in oil and in tech, everything, it seems like right now, is going the hell off. But I also have some areas of caution that I want to talk to you about later in today's show. But first, let me go ahead and get to the starting five. See? You see what I did there? Not the top five, the starting five, and that is Oliver Thorpe, Ralph Yoli, Robert Fausel, and Sam Cisneros. Welcome. That is the starting five there. So if you guys show up early, you get shouted out. So make sure you guys do that. The top five, the starting five gets a good old shout out. So make sure you're hitting that notification bell too. So where do we even begin? I guess we talk about Tesla, right? Tesla has gone the hell off today, and it right now is actually above the $630 resistance that we had talked about. There was several crucial areas on Tesla's chart that we said, hey, watch for these areas. If it gets rejected, it could get frustrating. If it breaks through, we should see some really nice movement. And really, you know, looking at Tesla, the areas on the chart just don't lie. They don't. You look at this, we talked about this 610 area. Look, remember how many times this came up here and got rejected? Broke through that, and over the last couple of days, consolidated a little bit above that 200-day moving average. This is a daily chart. And then, you know, we said, hey, 630 is going to be the next area that could be a trouble spot for Tesla. Sure enough, it was. You can see here back in, late May, it was struggling there, and it almost kind of tried to test it again early June, and then made another couple more attempts, finally broke out of that today. Why? Why is Tesla moving today? Well, in fact, all of the automakers are moving today because there's sentiment out there that the chip shortage, at least the worst of it, is behind us. Right now, I'm looking at GM, it's up 2%. Looking at Ford, it's up 4%. Tesla is up 5 1/3. So Tesla is the big winner today, but nevertheless, all of the major automakers are moving, and this is one of the biggest reasons as to why. The chip shortage is finally starting to move away, and we're talking about the chip. We've been talking about chip shortage and really how it relates to supply chain issues, and I think this is good for the economy overall. I think this is one of the first, I wouldn't say one of the first, but a crucial step in the right direction of things kind of getting back to normal as far as pent-up demand and supply catching up with that demand. We're starting to see some crazy numbers from used cars in that we're seeing the prices of used cars be even higher than what they were when they sold for retail brand new. Isn't that crazy? I just bought a brand new Jeep Gladiator about 6 months ago, and I could literally walk back into the dealership and trade it in almost for what I bought it for. I'm not going to do that because I absolutely love that truck. Highly recommend it. But it's crazy. But I think we're going to start to see, I think this is the peak for used cars. It seems that way. Could be the peak for used cars as we're starting to see the chip shortage issue start to no longer be an issue. We're just getting to this point. So don't want anybody to get their get crazy on this, but that's why we're seeing Tesla move today, and it may continue to move. Elon Musk has talked about how Tesla has been the demand for the Model Y in particular is astronomical, and we know how Elon likes to blow himself up a little bit, right? But he follows through with everything that he says, and he said in the last quarterly report that the Model Y will be the #1 car sold in the world by next year. Can that happen? Can the Model Y sell more vehicles than the F-150? I don't know. Definitely would love to hear from you guys, though. So leave some comments down below. Let me know what you think. But, man, it would be interesting if this chip shortage issue no longer is an issue and everything's back to normal as far as supply and demand is concerned, especially for the automotive sector. Could Ford and GM be in trouble? Not that they weren't already, but this chip shortage has given them some time to kind of catch up on technology and that sort of thing. And again, I'm not saying that GM and Ford are going to catch up to Tesla. By no means am I saying that. But this has given them some time to at least close the gap a little. And GM, Ford, they're not going anywhere. They're not. Could Tesla be the #1 EV maker and Ford and GM stay around still? Absolutely. Tesla's not putting them out of business. It's not happening. But Tesla is going to take up the majority of the market share. I do believe that will happen, and it is happening. So, good stuff for Tesla, man. I mean, good job for a lot of you guys who are sticking in with the company and the stock. I ended up taking, or I didn't take it, but I sold this one at 700. Still haven't gotten back in, but today it looks great. The trend looks great from this 546 low. And so if this does give me another opportunity around 630, I may actually end up getting back into Tesla on any kind of pullback. So you guys know me. I don't chase boners, right? I don't chase the boner candles. I'll wait for some pullback. If it doesn't, missed opportunity, and it happens. Here's the thing. It goes, there's always something else to trade. And with that, I would like to, speaking of there's always something else to trade, I would like to start a new segment here, and I have yet to have talked to Fat Man Zoom about this. So this might be a one-day thing, but if it catches on enough, and if Fat Man Zoom's a fan of it, it might become a regular part of the show. We always get told as YouTube creators, hey, you're always going to have haters. You're always going to have people who are going to shit on you and always have negative things to say, and you just got to let them roll off. And I do, okay? I do. But the thing of it is that the people that see the comments might be new. They might not know any better. And so if they're seeing comments of other haters or whatever, then maybe their perception gets swayed a little bit by a certain commenter. Maybe it doesn't. But nevertheless, I decided today, after I saw a particular comment, that you know what? I'm going to start calling these motherfuckers out. It's happening. And I'm gonna talk about this is gonna be the douchebag of the day. This is gonna be a thing from now on, I think. For one day. It's gonna be the douchebag of the day. And today's douchebag of the day is none other than Brian Bear here. Brian Bear says to my Wish trade, I put out a clip that says I bought more Wish stock. You guys heard me talking about this yesterday as to why, and I gave the reasons why, right? The reasons were because technically it looked good. Today, the douchebag of the day says, I wouldn't trust a guy who doesn't understand why Wish has potential. This dude thinks that Wish is like AMC. Do yourself a favor and unsubscribe from this guy. I got news for you. It is like AMC. It's 100% like AMC. Here's the other thing. I don't care about the ticker. I care about the chart. If I looked at Wish, right, and I had no idea what kind of stock this was, what kind of company it was, I would not care. There are certain types of trades that I make. This is one of those where I look at the chart and I say, you know what? I don't even care what the company is. I'm going to trade it because I'm looking at this bull flag pattern here. I'm looking to break above the 50-day moving average, and I say, hey, the risk reward looks good because it's way down from its all-time highs at $32 a share. We're down 60%, and now it's starting to move. Look at all this volume coming in. Boom, I'm buying it. I don't care what the company is doing. And honestly, I don't care about a company that sells shitty sex toy products. Give me the good ones. Where's Wish going at this point? You know, I mean, look, I'm going to make my money and run on Wish, and that's how you survive in this game and thrive in this game. I've been in this for a very long time, long enough to know that this stuff you can be in and out of, and if you stay married to something like Wish forever, you could end up getting burned. We saw that with Torchlight yesterday, right? People who bought it Torchlight at $1 thinking it was going to the moon and didn't sell at $11. Are you freaking kidding me? Get out of here with that bullshit. Congratulations, Brian. You are the douchebag of the day. Let me know how you guys like that. Oh, shit. Oh, man. But anyways, hey, you know, sometimes you got to do it. Sometimes you got to call them out. Douchebag of the day is more tempting than the starting five. Appreciate it, Sean. Shane Haley donated to the channel. Thanks, bro. Says douchebag of the day. Let's go. I've always enjoyed the rawness of this channel and not keeping it politically correct. I mean, we try to be respective of most people, but if you're not going to show me respect, I ain't showing you respect. You know what I mean? It's just not going to be a thing. JB Smith, thanks for the donation. Nevertheless, I still like the stock. I'm still in it. I haven't sold it. And in fact, I added to it yesterday. What more do you people want from me? You know, so I first bought into Wish at 1109. And then I added to it a little bit when it started to move up above that 50-day moving average, as you can see. So listen, joke's on him because I'm still making bank on this. And I have no reason to sell it at this point. It still looks really good. Even if the day ends up red, I'm good with Wish at this point. Going to continue to hang on to that and see where it goes. So I'm so glad you guys are loving it. Sound effects, please. Here's. You want to know how much I care about Brian's opinion?
Oh my God! Who the hell cares?
Does that make you feel better?
Yes, it does. It does make me feel better. It does. Oh my God, I love you guys. All right, I do need a sound effect, but we're talking about people we don't even know. That's so true, Rob T. Oh man. That's right. That's true. Fat Man Zoom's usually the one that, you know, has his rants, and I'm the one that's ranting today. Sometimes you just got to get it out, folks. This, it was not Cookie Monster. That's actually Grover. From the Sesame Street. Who doesn't love a good Peter Griffin? Nobody I want to be friends with. Mr. DeSoto's up 22% on Wish. Hell yeah, bruh. That's what's up. All right. I could see douchebag of the day really becoming a thing. Like, we could just make clips of that every single day. Every single day could be a clip, and we just put it on social media or some shit. People probably love that. Okay, good questions. I see a lot of people asking about Clover. So Clover has had a great day as well. I told you guys, full disclosure, I took my profits on this, was really happy with the trade. Even though I sold some at the top, held some free shares, saw it breaking support after support, and then ended up selling the rest of my position. So I'm not in this right now, but Fat Man Zoom is 100% in this. Oh, I should rephrase that. He's not. He's on free shares. His conviction is 100% in this, I should say. So he still has a ton of it. And when I say a ton, I'm talking 5 figures thereabouts. He still has a lot of Clover. But to think that, you know, he's on free shares as well with that kind of cash into Clover says a lot still. But we look at the chart here, and it's actually started to bounce back pretty nice. I told you guys yesterday, do you recall? Anybody who was tuning in yesterday, I told you, hey, I want to see this close or open above $13. I wanted to see it close yesterday or open today above $13, and I'd feel a lot better about Clover. Sure enough, it closed yesterday at what, $12.85, something like that? And then this morning it opened up at $14, and right now it's sitting right around there, and it looks great. It's up 10% right now. Had a really strong move all the way up to, let's come back to the 5-minute chart. Really strong move all the way up to 14.18. That wasn't the high today. It was higher than that, right? 14. Let's see here. 14.54 right out of the gate this morning. And so after power hour, it started to move back up, 3 o'clock Eastern time. So it really started to make some pretty strong moves. What up, Fat Man Zoom? Oh, man, he missed. Did you miss Douchebag of the Day? I feel like you could call in. Hell yeah. I knew he was going to. I didn't. Oh, you can't call in, but that would be cool if you could. Fat Man Zoom, if you're listening, if you can hear me, we just had a new segment, and we're going to have to run it by you. But I started a new segment today without you. It's called Douchebag of the Day. You have to go back and watch it. But anyways, with Clover, it's looking really strong. Loving the way that this is moving up. And can it go higher? I think the fact that this has had some really good volume this morning and has maintained this price point with even lower volume throughout the rest of the day, that yes, I think this does have the potential to go higher. Remember, like I said, I wanted to see this either close yesterday above 13 or open today above 13, and it did it, and it's maintained that price point, and I really like it where it's at right now. And it's closing strong too. Watch out in after hours trading. Lots of times we see after hours trading go nuts on things like CLOV that have a small share structure. So that could also be very much on the table. This breaks above 14.20 in after hours trading. It probably does go higher. So be on the lookout for that. Oh, man. You guys are cracking me up here in the chat. I'm loving it. So yeah, if you guys, let me just take a pause here real quick. If you guys are tuning in for the first time, welcome to Own the Chaos. The stock market's crazy and chaotic. Me and my big bad partner, Fat Man Zoom, have made it our mission to help you guys own it. If you want to see daily content like this at every day on the stock market, what we're looking at, get our certain opinions on stuff, make sure you're hitting that subscribe button. And for those of you watching right now and haven't hit the like button, you already know better. So let's get that thumbs up. We got 114 of you guys hanging out in here, 35 likes. That is 100% weak sauce. So yeah, let's get that up. Let's get the thumbs up going. What else? Oh, the watch list. So if you guys see the Bears and Bulls next to certain people's names, those people are in the Chaos crew. If you want to be a part of the exclusive group of the crew and get a watch list from us every single day and be a part of a Discord group, get access to my portfolio, all that good stuff. And really, just most importantly, the big value is being part of the community. The community is absolutely great, and it's less than $5 a month. You really, the risk is, I mean, I couldn't tell you how many people have paid for lifetimes of the Chaos crew with some of the call outs, some of the trades. It's been awesome. So hit the join button next to subscribe if you would like to do that. And you too could have a cute little bear or a bull next to your name, depending on how long you stick around. So yeah. Jay says, as it Jay SZN. I'm just going to say SZN. Jay, we are from Baltimore. We're in Baltimore right now. I don't know if you can see it behind me. Yeah, you can see it back there. That is the Maryland flag because it's the coolest flag in the United States of America. I don't care what anybody says. It's the best flag there is. Everybody else's sucks. Yes, even Texas. That's the best flag there is, period. Next to America. Anyways, we are from Baltimore, Maryland, and we are live right now in the studio from Baltimore, Maryland. So, yeah, love being in this town. It's great. Go Ravens! Hell yeah, hell yeah. All right, what else we got? So I see some people asking about a couple of things. Let me go ahead and, like I said, I want to just kind of, if you guys have some questions, I'd be happy to answer those. As far as earnings go today, I don't think there's much going on. Tomorrow's going to be a big day, particularly for FedEx. FedEx is going to be a big one. I don't think there are any other earnings today. Let me double check before y'all tell me I'm wrong. Any day now. Let's pull it up. Oh, there are some earnings today. Let me see. Oh, KBH. KBH is today. If Arfin's around, I certainly would appreciate you helping me out here. So KB Home has earnings today. I couldn't remember if they were today or tomorrow. And I think somebody reminded me even this morning. But they have earnings, and I think that they absolutely crushed them as well. This was a stock that we put on Stock Watch Sunday. If you guys aren't privy to Stock Watch Sunday, we do go live at 7:30 p.m. Eastern time on Sunday evening to kind of give you a snapshot of what we're watching for the coming weeks, or for the coming week, I should say, for the next 5 days following that Sunday. And right now, KBH is actually red on the day, so this actually should bode pretty well for the stock. Right now, it's looking like it's actually moving down a little bit. And it's kind of been interesting to see this move. We saw Lennar Holdings report earnings last week, the week before, and the housing numbers didn't really paint a good picture for KBH going in the earnings. But nevertheless, I think they crush it, and I think their outlook is going to be good. So definitely watch this one. If Arfin's in town, then I certainly would appreciate you shooting me the earnings numbers if you don't mind. Rob T says I don't remember the name, but the best place I ate in Baltimore was this barbecue place right next to a strip club. Oh my God, Rob T was on the block? Damn. That's a rough part of town, bro. That is a rough part of town. I do see Rudy Brown asking about Palantir. A lot of the tech stocks are bumping today, and I actually did want to touch on that too. So yeah, Palantir actually looks really good. It's up over 26 now. We talked about how 25 was going to be a really crucial resistance for Palantir, that if it could break up above that, it was going to continue to do really well. Sure enough, it is. Next stop for Palantir right now, at least on the chart for me personally, is at 2750. So if it gets up to 2750, that's going to be an area where I definitely would watch to see if this doesn't break down and get rejected there. But if it breaks, bro, I'm telling you, it broke through this downward trend, and ever since it's been doing extremely well. We zoom out here on the daily chart, it looks really, really, really good. Really, really, really good. So if it broke this trend here, and it's making its way towards that 27 resistance, it breaks up over 27. I think we're going to continue to be in really good shape, but watch that, because every time we've seen Palantir approach a pretty strong resistance, it's had trouble. So I'm not saying that you should sell it there or anything like that, but it may present you with an opportunity to, potentially add to your position. Or if you're looking to sell Palantir, that could be a spot to definitely watch for. Again, not telling you what to do, but those are definitely just areas that, you want to pay attention to if you're in it. So yeah, it looks really good. Oliver Thorpe says Asana. Yeah, and Asana was another one, and I use Asana every day. This is low-key killer right here. Asana absolutely crushing it. I can't believe it's up another 5% today. Unbelievable. Unbelievable. And this isn't like a Wall Street Bets move either. This is just absolute rip face. I mean, it's more than doubled since the middle of May. So a little over a month, 6 weeks, 5 weeks, and it's doubled. Unbelievable. This is one that we've been following for a while. I just never pulled the trigger on it. Shame on me, huh? What a freaking move. Fat Man Zoom and I use Asana every single day. And I know Jeff Chow's watching, and he uses Asana every single day too. And man, just crazy. What a wild move. What a wild stock. So yeah, I did want to talk to, does Fat Man Zoom have some Asana? I don't know if he does or not. I actually don't know. I thought maybe he did at one point in time. I'm not sure if he still has it. But anyways, I did want to talk to you guys about tech. Why is tech moving? Tech's moving because the innate fear of inflation is subsiding. There's a lot of evidence out there that's showing that inflation, like the Fed had been speaking about for months on end, may actually be indeed transitory. Imagine that. It's so funny to me that you have all of these analysts and hedge funds that get paid all of this money And all you ever hear them say is don't fight the Fed. And then they start fighting the Fed, right? I mean, Jerome Powell comes out and says, hey, we see inflation's happening. It's going to be a thing, but it's going to be temporary. And when you look at some of the things that are, have succumbed to inflation, it's stuff like used cars. The last month, we saw CPI numbers. Used cars took up a third of those numbers, and so that's something. Used cars are not going to stay high priced or overpriced for very long. It's just not going to be a thing. I will say that there could be some stuff out there that may stick. Higher wages, that sort of thing may actually end up sticking. Nobody's going to start paying you less money. But I think overall it is going to be transitory. And you have a lot of these analysts that have been fighting the Fed this whole entire time. And now all of a sudden, hey, they're like, oh, hey, you know what, Jay? You know what, Jay Powell? You might be right. You might be right. Yeah, might be right. And so what happens? The 10-year yield goes down. When the 10-year yield goes down, tech starts to go up. And we talked about this a couple of weeks ago. We said particularly FANG stocks were actually going to do really well. And I myself actually am in Facebook, and it's been doing awesome. It hit all-time highs today. That, I think, to me, is going to continue to be a thing as long as people buy into this notion that inflation is going to be temporary rather than permanent, and we're not going to see a repeat of the 1970s. And I've been saying till I'm blue in the face that I don't see that happening, and that I was agreeing with the Fed this entire time. I was not trying to fight them, and I was trying to understand where they were coming from. And so looking at something like Facebook, I mean, this thing just keeps going up. You buy the effing dip and move on. It's just one of those things where it's going to continue to go up. And I see that, today the 10-year yield is up, but when you look at how far it is from its highs back in March, it's not even close, right? I mean, we saw the 10-year yield this week drop down to 135 overnight, I believe, on Monday morning. Overnight, it was 135 Monday morning, and it's up slightly, but nothing like we saw back in February, March. Now, I will say, right, that the 10-year yield, the 10-year treasury yield is still very low. Right now, we're looking at the 10-year treasury yield, and it's sitting at 1.487. It's up 1% today. If we see incremental movements of the 10-year yield go up as the year goes on, I think that the stock market remains exactly the same. It's going to continue to grind higher. The economy is going to continue to be on fire, and everything's going to move together. I still believe that things like energy, oil, commodities, reopening plays, they're going to outperform tech. But tech is finally starting to bounce back here. And so that's why we said, hey, this is why we actually said, don't leave tech in general, but also pay attention to these value stocks as well, because they're going to probably outperform this year. And so far they are. I mean, energy's up, 48% on the year. It's absolutely crushing the S&P, which is only up around 13%. I say only because it's still fantastic for the S&P. But when you compare it to energy, that is phenomenal, right? I mean, crude oil right now is at $73.29. And so what do you look at right now with everything moving? I think it's just really, really important, and we've been hammering this home for a long time, to have a well-balanced portfolio. Now, I think that I need to clarify a little bit, because I just got done telling you that I was in Wish, right? I traded Wish with 5% of the value of my account. So I want to bring some perspective. I own a lot of stuff that I carry for a longer term swing trade, or maybe even a longer term investment. And then I have stuff that I want to just play around with, like a Wish or Clover, or even AMC. I would trade with 5% of my account if I saw the setup. But I think it's important to understand that I'm not whole accounting these speculative plays, these super speculative plays, but I'm also hedging and balancing out my portfolio. So I took on things like OIH, which is the oil services ETF that houses things like Schlumberger and Halliburton. And they've been lagging the rest of the energy sector pretty significantly. You look at the chart right now, my average on OIH is around 210. I initially made an entry onto this and have been scaling in since 194, I want to say, and it's been doing incredibly well. I was a little bit, I won't say unnerved at all, but I was a little bit, I guess, frustrated when it came back down and broke below that 230 support. But man, it blasted right back up through there. It did not hold today, but I'm not worried about it whatsoever. I think it was good to see this make this kind of move, at least try to break back up over that. Had a really great morning this morning, but I love OIH. So this is one that I think that would be good to hold if you guys agree with me that we could see energy continue to surge. Another one that I'm in is MRO. If you guys don't like something that's this high price, I understand, I get it, even though I think that it doesn't make any sense. If you think that something's going to double, it doesn't matter what price it is, and I think OIH has the potential to do that. But nevertheless, you look at something like Marathon Oil. It's priced at $13.58, and I've been talking about this since I've been in it at 11. Did I get in at the bottom? No, but I'm making bank still, And so it's still going up. I still think it has potential to go even higher. 14.16 was the high back here a few weeks ago, and it's been consolidating over the last, Thursday, Friday last week, along with everything else. It took a dive and then held up pretty well above 12.50 and is continuing to move. So my point is of just having a good, well-balanced portfolio. I still think that tech is going to be something that you should own, but I also think that it doesn't mean that you abandon the stuff that got you through March, April, and May either, because they're going to continue to roll. The 10-year yield is going to continue to go up. I just don't think it's going to go up in the same, with the same velocity in which we saw it go up in the wintertime. I think that it's very possible to see the 10-year yield get up to 2% by the end of the year. If it starts to move now, I think it could get up to 2% by the end of the year. And if it moves like that gradually, then the stock market's not going to care as much. What happened in February, March of this year, the 10-year yield just went crazy high in a very short period of time. And I mean, it essentially tripled within about 6 weeks. And that's just not normal for a 10-year yield to do that. And tech stocks suffer for that. They don't have as much they can't borrow as easily and all that good stuff. So it affects them for long term. And that's why they sell off. If the 10-year yield gradually moves up like this, I think it's going to be much better for people who own a lot of tech. But I think, like I said, it's still going to be important for you to own energy and the reopening plays, because they're going to continue to be monstrous, especially some of the hybrid ones, right? I own Airbnb. It is considered a tech stock, but it's also a reopening play. Those are good ones. Square is going to be a good one. It's a good hybrid. You get the best of both worlds. And I think those are going to be good. All right, so the market is closed. It is 4:03 p.m. where I'm at. Market just closed 3 minutes ago. KBH, let's take a look. Right now it's trading kind of flat, just barely up after hours. So we'll kind of continue to watch this and see where this goes. I was just checking in on some of the comments here. Jeff Panicka says, when tech dropped 6 weeks ago, I bought AARK, and have done well with the comeback. Yeah, ARK's been doing really well. Alexandria's and Marathon Oil, I think that's a great play still. If you think it'll double, why do you keep trimming SPR? So yeah, if anybody's in the Chaos crew, I've been trimming some SPR, which is my one of my highest conviction stocks. So I trimmed it today, and I'm trying to not over leverage myself. So Spirit Air Systems was starting to take up over 18% of my portfolio. So I wanted to make sure that I was reducing my risk. Do I still think that Spirit Air Systems has the potential to double? I do. But I think also that I could use that capital to go to other places to help me manage my own risk. And so that's what I did. I don't like having too much leverage in my account. And so that's why I ended up cutting some of that. But it doesn't mean that I dislike Spirit any more than I did before. It's just managing risk and taking profits. And that's the thing that I think confuses a lot of people. Just because you sell a stock doesn't mean you hate it now, right? And I didn't sell all of Spirit. I just trimmed it. And I think that's what gets a lot of people, I guess, confused or discouraged, because, it's like you sell something and all of a sudden it's like, you just beat up their puppy, right? It's like, listen, man, you're not going to make money in the stock market if you don't sell something. That's just how it works, So, and it doesn't, and I haven't, I haven't sold all of it. I'm just taking something off the table. Kathy Wood's done this with Tesla, right? She doesn't keep any more than 10% of Tesla in the AARK or ARKK ETF. And she does that to manage risk. So Tesla doesn't just take up the entire portfolio. It's all about balancing, keeping that balance. You take something off a little bit off the top and put it towards something else. So, you can keep watering those other plants so that they can grow too. It's all that whole mantra of not keeping all your eggs in one basket. And so that's what I'm trying to do. Looking at KBH right now, KB Home, still no activity at this point. Sean says not the puppy. Oh, man. While we're waiting, I'll take some questions here. What's your conviction on coin long term? If we eventually see widespread adoption of crypto, will we see something similar to Apple over the next 4 decades, yielding average of 40% year over year? Asks Mick. Mick, I think that coin could eventually get there, but you're going to still see a lot of volatility, man. As long as things like Bitcoin and Ethereum have these 50, 60% swings, Coinbase is going to be like riding that mechanical bull, man. It's going to be all over the place. And Coinbase has been having a pretty decent last couple of days, but it could very easily just come right back down. So long term, if you want to hold on to Coinbase, this is something that you're thinking about putting in your retirement account and you're young, you're my age, 30 something, 20 something, then yeah, I think that this is something that's worth holding on to. And Kathy Wood's been adding to this, and I think a lot of people get confused as to why she continues to add to it. But she talks about this all the time, about having at least a 5-year time horizon. So if you at least have that, then I'd say you're probably on the right track. But if you're buying into Coinbase today, thinking that you're going to make money next week, I think you got another thing coming. So as long as you know and are aware of the volatility that comes along with owning something like Coinbase, I think you're fine. But if you don't, then you might have to reassess your plan. Yeah, Mick says I'm 29, holding on to 20 shares, looking at it long term. I think that's fine. Just my opinion. If it were me and I was looking at this, I was in your shoes, I probably would consider doing the same thing. Alex Ramirez says, do you have a video for your Weeble setup? I don't actually. I need to get on that, though. I have a lot of people asking me about that. I think that's something that I should put up. I think it should be a Chaos Crew exclusive. So if you do want access to my Weeble setup, hit that join button next to subscribe. And we'll make sure we put that content out for our Chaos Crew folks. Right now, after hours, just checking back in with KB Home. It was a Stock Watch Sunday special here. They have earnings after hours today. Right now, it's up about 0.5%, a little over 0.5%, but no real volume to speak of. So still just waiting on those earnings to come out. Nothing from them yet. Claudia says we're young. Yeah, we're young. I still feel young. I'm 35 years old. I don't feel old at all. Oliver Thorpe. Hey, what's your planned long-term conviction on Chamath stocks of Open Door and SoFi? Both looking good entry points. Looking like good entry points right now. I think I don't even need to look at the chart really. I think that they're both going to be okay. SoFi's got a really bright future. Open Door is going to be the future of the way people buy homes. So again, kind of like along the lines of Coinbase, I think those are going to be good long-term, but I think you're also going to experience a lot of volatility with those, especially because SPACs still haven't quite come into the favor, at least like they were before. And obviously those are both SPAC plays. I have all the confidence in the world in Chamath and the way that he's been able to bring in good quality, solid companies. And I think SoFi could compete, has the ability to compete with something like a Robinhood, some of the other popular brokerages as well. And they're also making moves to do that. So I like SoFi for that reason. And Open Door, it's going to be the future of the way people purchase homes. And again, you just have to, I think, understand that you're going to need to have some patience with both of those. But long term, I think they're going to be just good, just fine. All right. This is a really good question too. Sean asks, as we're waiting for earnings to come in for KBH, what's your conviction on coin? I'm sorry. I already read that question. I scrolled up too fast. There it is, Sean. Thanks, man. If you are holding something for 5+ years, would you recommend selling after a huge run up, then buying back in with the profits, or just hold and add if you have spare cash elsewhere? This is a really great question. If that's your time horizon, Sean, what I would say is that, yes, I would probably at least trim something on huge run-ups like that. I always, Jim Cramer always says this, and it's always stuck with me. Say what you want about Jim Cramer. He's somebody that I look up to, have always looked up to. I've read all his books when they first came out. But he mentioned, you buy, you sell into strength, you buy into weakness. And I think that you could do that with things that even hold long-term. If, anything that you're holding, like if it's an Apple or an Amazon or even Facebook, all those good long-term holding plays. NVIDIA is a great example of this. With the way that NVIDIA has been running, even if you planned on holding NVIDIA long-term, how could you not sell it, especially if you got in low? If you got in NVIDIA and been holding it since even below $400, how do you not sell some of it today? Or since the run-up, And then because, as much as we love NVIDIA, we think that the move that it's been making just because it's splitting is insane. So I do think that NVIDIA has room to correct. So, yeah, I don't think that there's anything wrong with taking something off the table and looking for opportunities when it does sell off, because I think that it will sell off, and it has already started a little bit. But I think that we're going to see more volatility on NVIDIA leading into that split. But, yeah, man, I mean, that's a really good example of a good long-term company that you want to hold in your long-term portfolio that's just really gone off the rails, and you want to take something off the table and kind of move back into it when things settle out. Now, sell all of it? No, I think holding something would still be appropriate, but trimming something, to me personally, I think that's a really sound strategy. All right, so looking at KBH, it looks as if it is selling off here after hours. So again, they had earnings. This is interesting. Be curious to see what those numbers are. Still don't have them just yet, but just waiting to see how they go when those numbers come out. So KBH right now is selling off. It's down around 1.7%. Anybody else in these home builders? Just out of curiosity, leave me a comment. Do you have D.R. Horton? Do you have Lennar? Do you have KB Home? Toll Brothers? Any of those? The home builders have been rocking and rolling for quite some time. Here we go. Arfin's got them out. Thanks, man. Q2 earnings per share as $1.50. They beat their 131 estimate. I think mine was around 153, if I'm not mistaken. That's where I had them coming in at. Actually, I can tell you in a second. But it looks like they missed on sales, $1.44 billion compared to the 1.5 that was expected. So that could be why it's moving down a little bit. We'll see where this goes. I wanted to check on my estimate for KBH to see how close I got. Let me see here. Give me 1 sec. I'm going to pull this up. What did I say? I said KBH was coming in at 151. I said they were coming in at 151. How about that? 151 was my estimate, and they came in at 150. I was a penny off. Damn it. I was so close. So, yeah. But they missed on sales, and so I guess that's why this is coming down. I'm sure we'll get some outlook on them to see how that goes. But this is in response to probably to some of the housing numbers that came out today. Weren't all that great. Existing home sales were down, but that's not a surprise, right? we said that the supply issue within home sales is going to continue to be a problem as long as demand stays this strong. And so existing home sales, I'm not going to be shocked if we see those continue to slow. But to me personally, the only way that you solve the supply issue as it relates to demand is to just build more homes. And so I still think that, maybe we look at KB Home and say, hey, could this be a good opportunity to maybe buy on the dip? And so we look at something like this. Now, I will say that to me personally, I like D.R. Horton. I think they first of all are the largest home builder in America. They are selling houses like crazy, but KB Home is too. So many development sites that you just look down the news feed for KB Home and they're just opening up new home sites everywhere. But you guys are like, how can we trust you now? What? Because I was a penny off. But yeah, man, I think that KB Home is going to be a good opportunity. If it comes down and retests $40, $41 down, it's down right now 3%. So what's that mean? Where's that make it at right now? Yeah. So I have support here at 41.50. Let's see if it holds that. If it holds 41.50, I'd still say that this could be a good opportunity, in my opinion, to maybe grab KB Home, because I don't think the story's over for them. I don't think the story's over for any of the home builders. I think the sector overall is going to continue to do well. Yeah, they missed on sales, but I don't think that's going to be a big deal. I mean, the earnings beat certainly is big for them. Just kind of glancing over some of the comments. Jeff says lumber prices need to settle down. I would argue that they have settled down, Jeff, at least to a certain degree. I mean, lumber prices are down 40% from their highs. Now, I'll agree with you here that they're still too high, but they've come down substantially since May. So lumber prices are coming down. I think that could be a precursor to what's, for the housing market to settle out a little bit. But man, as long as interest rates stay where they are, and according to Jeff Powell, Jerome Powell, Jeff Powell. Who the hell is Jeff Powell? Jeff Palnicka. That's what I did. I mixed those two up. You see what I did there? But Jerome Powell, thank you. As long as he says the rates are going to remain the same, at least for the next 2 years, then expect the housing market to still be like this for the next at least 18 months. We'll see where that goes. But either way, you have KBH coming in. If you guys are just tuning in, KBH had earnings today, and you can see right now it is red because they missed on earnings. They beat earnings, they missed on revenue. And so that's why it's down a little bit today, but I still think that this is probably going to be a good opportunity. Again, if this holds at 41.50, I would say we're in good shape on KB Home. If it breaks below that, watch out. It could continue to come lower. We'll come back out to the daily chart. And if it breaks below that 41.50, I would say that there's definitely potential for this to come down as low as, oh my goodness, excuse me, as low as 40.21. Yeah, I would say 40.21. NASCAR All Out says Alf retraced nearly 50% of the move from yesterday. Tomorrow, another consolidation for the next leg up. It looks like that's a question. So yeah, we talked about ALF yesterday, right? And I said, hey, the last thing I want to do is do what? This is where the boner candle conversation got a little sideways yesterday. And I said, listen, there's not one part of this chart that makes me want to buy anything of where it's at right now on ALF. And so today it did have a little bit of a consolidation day. I wouldn't say that it pulled back 50% though from its highs. I would, because they got it to 1645. So the 50% retracement from its highs would be somewhere around 850-ish, 825. So, it still didn't retrace 50% from its highs. It would have had come all the way down here in this area. So it's up after hours. So maybe it continues to move, but yeah, man, I still think it's a little bit risky to be hopping in here. But as always, if you just have to have it, the thing that I always live by is just scaling in, using the power scale to your advantage. Take starting positions. Don't go all in all at once, and just kind of see where it goes. Watch how it plays out, and then buy into weakness. That's how I do it. Don't chase the boner. I was right. Yeah, man, for sure. All right, guys. Man, I can't believe this hour flew by. Can you believe that? Almost an hour. But I think that's gonna be it for me, folks. So we covered a lot of stuff. The Clover Wish conversation still gonna be a thing. Douchebag of the day. Let me know in the comments if you like the douchebag of the day. That might stick. That might stick for a while. We covered KB Home. We talked about why tech is moving and why I think it can continue to move, at least for in the short term, but don't leave those cyclical value reopening plays, because they are still going to be absolute monsters for the rest of the year, in my opinion. So, at the end of the day, having a balanced portfolio is really what it's all about. And so if you guys want to be back here, Fat Man Zoom will be back, I promise. I know that it's been just me over the last 2 days. Hopefully I've kept the everything afloat, kept everything together. I appreciate you guys too, helping with the support and help me through this. It's been really weird. I was so used to doing it by myself for such a long time. Fat Man Zoom came in. He's been doing it for almost a year now. I can't believe it's been that long already since I've had him on. But it was really weird going back to just being by myself. I don't like it. I don't like it at all. So he'll be back tomorrow, and we'll have some other great content for you. So be back here at 3:30 p.m. Eastern time. We do this every Monday through Thursday, and then on Sunday at 7:30 p.m. Eastern time as well. So if you guys are visiting for the first time, again, give me a thumbs up if you appreciated this live stream. If you got some value out of today, definitely would appreciate it. And consider subscribing. Hit that notification bell as well. And as always, folks, we'll see you before the bell. That's going to do it for me. Peace out, bitches.
I quit this bitch.